Yo, the stock market just took the Debo punch to the gut, man. Everything went down. Let's check out what's happening. Let's check out the S&P futures. S&P futures right now are ticking higher. We're around between 18 and 20 as we speak. And as you know, that continues to fluctuate. 39.68. Yesterday we closed lower. And man, did we close lower. That market moved sharply lower. And on Monday, we talked about how the market can continue to move lower. So it's no coincidence reading a chart helps you understand what can happen in the market. But back to what we expect to come next. So we moved lower yesterday. Today could be a slight rebound, we could see. But regardless of that, this wedge pattern that we drew before, this is what we are concerned about. We want to see what happens when the price finally gets either above the upper trend line or below the lower trend line. Because this is what happens, all right? In a wedge pattern, very simply understood. Think of it as a spring. That spring you have in your fingers. You can press and press and press. But what happens when you try to press it down? When you compress that spring, what you are doing is you are storing energy. That stored energy is going to have to bust somewhere, right? And this is what happens with wedges. Wedges are stored energy, price activity energy that is going to eventually make a move. Will it be higher or will it be lower? You don't know, all right? What you know is that that trend line is going to give you the signal for where the direction of the trend is going to either change or continue. In this case, I think it is going to continue because we have been moving lower, and as I described in the last video, all the moving averages are starting to roll lower. The 200-day is starting to flatten out as well. This price is probably going to move lower. Let's keep it simple, ladies and gentlemen. We do not need to complicate anything in the stock market at all. Let's move along to the next futures that we check, and that's going to be sound check for the Russell. All right, and let me pull my keyboard out because for right now I am struggling because I need to get, oh, come on. There we go. All right. Yo, the Russell right now futures are also indicating highs slightly. As you can see right now, about 590 or so. All right, 1840s is where we're currently dancing at to see on a Russell. The Russell right now is showing the path to greatness if you know what you're doing. If you don't know what you're doing, you're about to be frustrated, all right? What I'm seeing right here, which I didn't discuss in the last one, but I observe now, is, ladies and gentlemen, this is a pattern called an inverted cup and handle. All right, the inverted cup and handle is a bearish signal. It is indicating that a move lower is likely to happen. This here is the cup. This here is the handle. Once we break 1700 on the Russell, you could say goodbye to anything above 1700 because sun is moving lower, period. That's all it's going to be doing. And if you can prepare for that, great, because you'll be in perfect position for this next wealth transfer. This wealth transfer that's getting ready to happen right now is getting ready to make millionaires. All right, it's going to transfer that wealth from the people who don't know what they're doing to the people who do know what they're doing. What side do you want to be on? You know the answer to that. Make sure that you tap that subscribe so you can rock on the side of the no. All right, you want to know. Back to what we're talking about here, what to do. So if you don't know what to do, let's zoom in. Stay out. Clear. All right, one of the most important things I learned about the stock market as I continue to be in it is that it's very important to know what not to do. Okay, because you do not have to involve yourself in the market every single day of your life. You pick your spots, and then this is a position right now where you do not need to do anything and you want clarity. Wait for it. It will reward you greatly. Trust me on that. All right, That is the Russell. Now let's go on over to the Dow futures. All right, Dow futures right now are indicated higher as well, as they got routed yesterday like everybody else. But right now Dow futures are around 31,300 or so. We'll just keep it around there. All right, let's take that zoom in. That zoom in is showing us the same activity that we saw from the other indexes. Now this is also showing very clearly the trend line that we drew last time. The market is trending lower, and we're in this wedge pattern similar to what you saw in the S&P. The Russell has the even scarier pattern that I said that is likely going to break lower. The rest of the market is going to probably follow. This is short and sweet because we want to get to the meat and bones of it, right? Last time we talked about our 6 stocks. We're going to continue to do that as well. We cover Apple, Amazon, Alphabet, Netflix, Tesla, and Meta platforms. So let's jump. We're going to go right into Apple. What I am going to do this time is I am going to switch it up with APPL. What I am going to do this time is I'm going to switch it up, and we're going to talk about it not from the weekly standpoint, but I'm going to change it. I usually do it the weekly because it gives you all of the patterns. All right, you know what? Let's do this. Let's go back to the weekly. All right, just to show you how things go from the top down perspective. We're going to approach it this way moving forward. All right, from the top down. All right, started from the top and now we're here. We're gonna move lower. I spotted a double top situation on Apple, which I highlighted last time. All right, double top, boom boom, and now we are moving lower from that same area once again. And I showed you how the sellers are giving you the clues, and anytime it gets up near this area, they're selling. Those candles right there are giving every bit of clue, saying warning, warning, warning. They don't like it above there. Until you can get a solid close above there where it's strong, don't even worry about it, because they're going to sell that off. Right now, they're showing you that they want to move lower, and the price target is around 130. How did I get to 130? Let's check it out. 130 is where the last move was at, and we're likely going to retest that area to see if the bears still have enough strength to move it further. If we do break that 130, and chances are we will move lower, what's the next price target? This is how you lay out the land when it comes to your charts. 130 was where it was at last time. All right, key, look for where price was before to help you understand where it's going to go. If you look at 130 and you look in the past, you see activity in this 130 area. It may not be straight on 130, but yo, it's near 130. You have a zone that you can count on for that price to move to. So 130 is where I think Apple is going to eventually move to, and if it's something that you want to get into, that is a great price to start at based on the pricing that we have now. 130, if it wants to bounce off of 130, cool. If you start at 130, then you have a strong basis. If 130 does not work, where do we go next? 120 seems to be a very decent area as well. So I would start buying around 120. Keep it simple. Keep your levels that you want to buy at entry points that make sense for you to end up making a profit, because 130 shows you that it could move higher. Try to buy at the best levels possible. That's Apple. Oh, I did say I was going to do the top down, didn't I? Yeah, let's do that. Let's go back to the daily here. You can see this is zoomed in on what you just saw. All right, you saw all the moves up here, and you saw that anytime it's up there, it sells off. We had a move higher, everything rolled, and now we had a huge red candle. We're likely going to break that. And let's see, I think we get to around, let's measure that. Let's see, 150. All right, 150 is the next target area that I think Apple will likely test out. Let's move on in to Amazon. Let's see if we can first spot any patterns to help us. Oh, what do you see? What's that look like to you? We just covered that chart not that long ago, about 10 minutes, right? This is an inverted cup and handle. All right, we got the cup and we got the handle. Once we come back down to around 110, you can kiss anything above 110 goodbye, because it breaks there, chances are it's going to move lower. Now let's zoom in with the daily. All right, the daily gives you that the 200-day on this chart is beating the crap out of this stock. All right, the price is not filling it. We got a big gap here that needs to be filled. We moved back to where that gap resistance was at, and we sold off, and we're likely going to close this gap one more time. Well, it's already closed, but we're likely going to move back to where that gap support was before, test that out around that 125, which we did before. That 125 fails, ladies and gentlemen, we are likely going to continue to move lower. And price target right now is 110. Why is it 110? If we look at the 110 area, you can see why I said 110. That is because we've got a lot of activity around now. This is how reading a chart helps you, ladies and gentlemen. You want to buy at the best prices possible. This is how you do it. You look to see, where were people at before? Where was the party at? Where was everybody hanging out at saying, let me get Apple shares, let me get Amazon shares, this is where you need to look at. This chart is your roadmap to understanding how and best prices to buy it. All right, that's Amazon. Let's go over to Meta Platforms, METAOD, man. Yo, Meta Platforms closed at 153.13 yesterday and were indicated higher at 154.02. I was actually a proponent for Meta because I saw how beat up it was. All right, and we can see that there's major support around that 160 area. We've been there before, and last time we were there, we pushed higher. I don't know if we can recover now. Now, that's only because the current market conditions are very bearish, and you have to understand and encompass the entire market condition can affect how a stock moves. No matter how strong it is, if everything is selling off, chances are it's going to be part of that sell-off. We may have strong support around in this area, but that don't mean nothing to a market that's trying to push lower as much as possible. So Meta, where's my price target at? What we should do is get in around this area. I still like this area because, as you can see, there's activity there. If we take it back even further around this 150 area, we saw that it took off around there before. There's strong support around this area. Now, I like an entry point here because historically you got support that shows you, yo, a lot of institutional sellers got your back here. So be part of that wave. You want to be a barnacle on the whale. That's all you want to do. Let the big money lead you. This is the weekly. Let's go top-down analysis, and we go to the daily. The daily right now is showing that this support around 160 is getting tapped on. We just hit a new low. What's that showing for the year? 152.67. Do we want to enter around there? Yeah, we do. This is where people get scared. Don't get scared. Scared money don't make money. Great entry. If it falls from there, you have to have a plan on what to do. If it falls, where do you buy at? Let's zoom back out to see where we could potentially get in at if this continues to fall. We want to see what's the next level of support. Ding, ding, ding. This is where you see the next bounce that happened in the past, right around that 125 area. And then additionally, if you go back, you see what? 125. Yo, I'm telling you, man, this stuff is not rocket science. This is very easy. You want to be patient, and most people aren't patient, and they're going to lose money in the market. Let's not be that one, all right? Make sure you hit that subscribe button. That's going to lead you to the path of patience there, all right? That's Meta. Let's check out one of my other ones here. Netflix closed at 218.13. This is one that I said, yo, just stay out, because right now it was supposed to move higher. That 250 was supposed to be broken, and it wasn't. Sellers slapped the crap out of Netflix when it hit 250, and it went down, and it has been bouncing in between that 250 to 220 area for a while, and that is showing that the bears have a stronghold on that price. That 250 did not survive, and as you can see here on the weekly, that we may have a position here. All right, if that 200, that 220 holds up, but I don't think that 220 is going to hold, because once again, the overall market conditions are showing that, yo, it's crumbling out here. It is not safe to be in these price streets. Let's zoom in, top down analysis. That's the weekly. Let's go into the daily. Daily is showing that we have a huge gap here, and that we did hit that gap. That gap showed that resistance is strong. It said stay down, and it did stay down. We're bouncing off of a 50-day moving average, though. That's something that's pretty good. So once again, there's really no clear signal right now. It is a struggle. That war is happening. Do you want to be part of it? Remember, pick the money up off the floor after everybody's knocked out. That's the advice I can give you, all right? Stay out of Netflix until they tell you that the water is safe to enter, all right? That's Netflix. Let's check out Tesla. Tesla is at 292.13 and indicating pretty flat right now as far as the futures are concerned as we talk. And nothing's really changing right now as far as the market. Now, I told you before, 300 is where the buyers are not at. 300 is where the sellers are at, all right? I'm going back to the weekly to show you what we talked about last time. We showed how the market has sold off the prices when they moved higher. And we also showed that around 300, around this area, we moved lower, and we are in a pattern where we've seen huge candle here, huge candle here. Anything above 300, they say, yo, ching, 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 take the money. The register gets rung, and people are getting out around that 300. So don't buy around 300. This 292, no good. I would not touch Tesla around no 292, nothing. All right, I'd be selling. That's all I would be doing. So a short, put, all of that good stuff, that should work better around this area. Why? Because we're seeing selling around there. If you want to buy, 225 is the best price. Why? Once again, look at all of this activity. Look at this. Look, oh, good God, look at this. 225 all over the place. 225, 225, another 225. 225 is jumping. Club 225 is over there. That's where it's jumping. Club 292, ain't nobody there. I wouldn't be going over there. Nobody's having fun over there at 292. All right. 292 does invite another party, but that party you might not be familiar with. That's the sellers. All right. If you're a buyer, you go in the club 225. All right. That's Tesla. And I think that is it. No. Hold on. We got one more. That's right. We're dancing on it. Google. Alphabet 104.32. All right. Top down analysis here. Weekly is showing that this is a move lower. We've had, what is that? What do we want to call that? Yeah, we'll just call it a double top here, right? Double top, boom, boom. Those two candles right there show a double top. Right around 150 is where everything starts to go down, and we are moving lower, all right? 110 is where Club 110, where the buyers could be at. Club 110, the fire alarm went off. Everybody said, ah, and they're getting out. So now the sellers are in action, right? Next price target that you want to look at around is 100. I see Google moving to 100. All right, that's a wrap, ladies and gentlemen. That's all of the stocks there. Make sure that you check me out every single week. I will be giving you the plays. All right, where to buy at, where to sell at, where all the sellers and buyers and all of that good stuff. All from a chart. I don't need any news. That stuff is confusing. Also, it muddies up the waters. Make it clear. All right. We'll check you next time. Peace.